Is there a hint that the crypto markets have maybe turned a corner when it comes to the losses of FTX? Well, joining us now to discuss the crypto markets is none other than Anthony Georgiadis, general partner at Innovating Capital. Welcome, Anthony.
Thanks for having me.
Thank you for being here. So when we look at the futures markets and on the CME, the Chicago Mercantile Exchange, we see basically it's almost as if there is a slight premium in the 3 months. We kind of look at the CME futures exchanges as almost as a proxy for institutions, but, and as this chart shows, there's still a lot of backwardation. So what are we looking at here? What's happening now? Is that near-term premium anything to cheer about? Or should we still focus on the fact that everything kind of further down is a bit at a discount there?
So I think there's a couple of things to touch on here. To your point, if you look at the short part of the curve here, you're seeing that Bitcoin is trading at a premium on the futures exchange. And what that really indicates is that there is a lot less short interest out there from a lot of institutions. And I think if you look at what's happened over the course of 2022, a lot of people might think that FTX goes down, Bitcoin might crash 30, 40, 50%, right? But what was surprising in that specific scenario for a lot of people was really the resiliency and key support levels that Bitcoin was really trading between. And the bigger impact there has to do with the fact that a lot of that institutional and high-risk leverage, that systematic leverage in the market, had already been, for the most part, flushed out over last summer with the likes of Three Arrows and the Luna debacle. And so what we've seen now is there's been strong support and I'd say relative resiliency over the short term with respect to Bitcoin. But as you noted, the backwardation kind of lends itself to the longer term uncertainty in pricing. Let's not forget that this rally the last couple of days that we've seen in Bitcoin has really been almost in tandem with the broader markets, waiting for the CPI print that's coming out tomorrow. So there's still a tremendous amount of sensitivity to general monetary policy with respect to digital asset prices themselves.
Right, and to be sure, the leverage isn't the way it used to be a year ago, 2 years ago, with the loss of a leverage player. Right, FTX was a market where you could leverage, and apparently Sam was doing it too. But nonetheless, it's the loss of this volume. That also signifies something here, right? That the relatively near-term discount that we're seeing. So after the premium, it then goes down to a discount, and that uncertainty is also happening on a very thin volume going forward. Correct?
Mm-hmm.
We don't expect volumes to pick up anytime soon.
Right. And that really kind of lends itself to what we're trying to find out is really what's going to be that catalyst for the market moving forward. We've had obviously a few downward catalysts over the last year. Prior to that, we had a tremendous catalyst in basically free money, very easy monetary policy. And that quick reversal has led to what we've seen take place over the last 12 to 18 months or so. And as you touch on moving forward, what's going to be that catalyst to really drive institutional adoption back into the market? And it's easy to just look at price as a KPI, but I think that there's a few other aspects, some exogenous from specifically just looking at core pricing itself. Number one might be more stringent regulation in the crypto industry itself and in the digital asset industry. One of the positive impacts of what we're seeing today with the DCG Genesis debacle, the FTX unraveling, etc., has to do with the fact that federal regulators are going to feel induced to further regulate this industry. And regulation on the surface might seem to be opaque and scary and uncertain, but really regulation is key for further institutional adoption, to really actually provide a pathway for potentially using digital assets in a mainstream point of sale transactions for large powerhouses to actually park client capital into the digital asset space. So that regulatory aspect could be one key catalyst. And if you look at obviously the back end of the curve, we don't necessarily see anything in the imminent future that would point to that direction. However, I wouldn't be surprised if after this fallout, that regulatory path is actually accelerated.
At the same time, we're seeing a narrowing of the GBTC discount, the Grayscale Bitcoin Trust there. And so I wonder, do you see a speedy resolution coming up, or could that release some liquidation pressure in Bitcoin?
There's still a lot of uncertainty with respect to the GBTC and obviously the underlying parties, Genesis, DCG, etc., that are affiliated with this actual event itself. The interview that you just had on prior, I think, did a great job kind of touching into exactly all the key angles there. So we're definitely going to be on the lookout just with respect to what exactly unravels here with respect to DCG's implications, the potential risk of coming of funds relative to potentially just overstatement of assets, and its implications with respect to underlying GBTC pressure itself.